Hi, this is PR Sundar. Welcome to this special episode where I will be explaining about REIT and InvIT. Now, in normal markets, you buy some apartments or you buy some small office spaces. So, let us say last month I bought one apartment in Chennai and I also bought one office which costs only 3-4 crores. The individual people can afford to buy. Let us say I have a very big shopping complex in Chennai, and if I want to sell it, then the price of the shopping complex is 1000 crore. How many people can buy for 1000 crore? There are not many people. And because of that, the people who are ready to buy, they may be quoting a very low price. There will be illiquidity in the market. So, what I can do, instead of selling my shopping complex to one person at 1000 crore, 1000 crore not many people will be there. And what I do, I just make 100 shares of 10 rupees each, total is 1000 crore. I just give it to the public. The people who buy these shares, they become shareholder of this shopping complex. Normally, this is how the share market works. But in share market, it is a companies that are giving the shares. But here in this case, it is not a company. It's just a shopping complex. So, therefore, here we don't use the word share. So, we use the word Real Estate Investment Trust, which is called REIT. And what you buy is not the share of the shopping complex, it is a unit in the trust. So, the entire shopping complex I will be transferring to a trust. So, that trust will be managing the property and you are buying the units from the trust. What is your benefit? So, when the trust manages the property, they get the rentals from all the shops, and after maintenance, so whatever the remaining money they have, a minimum of 90% of that money will have to be distributed as dividend. If I buy one office, I rent it out and I get the rental. But here you buy the units and the trust will manage the property, they will collect the rent and they will distribute to you as a dividend. Then, is there any possibility of a capital appreciation? Yes. Suppose if the land prices go up, the property prices go up. So, you also get a capital appreciation. So, this concept is very famous in other countries, but in India, it is a recent concept, and I think so far there are only 2 or 3 companies which have come out with REITs. A company called Embassy, Mindspace and Brookfield. And the units are listed in the stock market and it is being traded. Now come to the next site. Let us say I am an infrastructure company and I constructed the road from Chennai to Bangalore. The construction cost is about 1000 crore. And what the government tell me, I can collect the tolls as the return for my investment. So, the cost of the construction is recovered through the tolls. Now, let us say if I want to sell this, again 1000 crore, there will be nobody ready to buy. The same thing what I can do, I can convert this into a trust, transfer the properties to a trust, and the trust will be issuing the units to you, 100 crore units of 10 rupees each. Then, what is your benefit? So, the toll which is being collected, and after maintenance and expenses, a minimum 90% of the toll collected will have to be given as a dividend to you. Capital appreciation, of course. In future, the toll collections may increase, so your return may increase. So, when your return increases, automatically the base capital will also increase. So this is called infrastructure investment trust. So if the underlying asset is real estate, it is called real estate investment trust. If the underlying is some infrastructure, then it is called infrastructure investment trust, InvIT. Now on April 29, there is one company, Power Grid. So Power Grid is a very good company, it's a government company and it is being listed in stock market. So this Power Grid is coming out with an InvIT IPO, and which opens on 29th April, closes on 3rd May, and normal IPO and this one, there are some differences. Normal IPO, the minimum amount is somewhere around 15,000, 20,000 like that. But here, you have to apply for minimum of one lot, and one lot is 1,100 shares. And so, the minimum is 1,10,000 if you are applying at cutoff price. It is a book building issue, 99 rupees to 100 rupees, but most likely it will be issued at 100 rupees. Retail people have the provision to mention cutoff. So this is something slightly different from other IPOs. Two small investors with 20,000, 30,000 cannot apply. So you need to have a minimum of 1,10,000. So these units will be listed in the stock market. So the listing is on May 17th. So people generally ask, is this an equity or debt? Actually, this is something in between equity and debt, but more like a debt. And you can expect about 8 to 10% dividend yield from this trust. And I am not very sure, but what I read, okay, you are receiving the dividend from the trust. So the dividend received from the trust is exempted from income tax. That is what I understood. But when I called my auditor, he was not sure. He told me he will check it, he will come back to me. So as and when things are clarified, I may be announcing it in future videos. But as of now, if I am not wrong, the dividend is completely exempted from tax. So if that is the case, if you are getting 9%, 10% return, which is non-taxable, with the possibility of a little bit of capital. Capital appreciation is not going to be very high, with a little bit of capital appreciation. So it is a very good investment. And earlier, IRB Infra company came out with InvIT, and there was another one called Grid. Okay, but one thing good about this Power Grid is a government company, so which is relatively safe. So I hope you enjoyed the video. Thank you for watching.